finding something where you think is a great idea and then testing with enough honest people who can be nice about it, but give you 10 reasons why it won't fail, or it would fail, or where the problems are with it, right? And then being able to sort of bridge and say yeah, this is still a great idea. I think that's where you sort of elevate to the next stage, right? See too many founders around, too much in their own bubble around I think this is a good idea, right? But I don't validate outside with not just investors, but also the users. And then the other way around, which is they don't think it's such a great idea, but they're sort of following what's the flavor of the AI month out there, whatever, what have you, right? I think that's also another great way not for it not to work.
If you are in the Singapore tech ecosystem and haven't heard of JJ Chai, you have probably been living under a rock for many years. JJ is the founder of Rainforest, the leading builder of e-commerce brands in these parts. In this episode, we touch on JJ's learnings across McKinsey, Airbnb, and Carousell, how his experience as an operator has helped him as a founder, how he found the right co-founders to join him on his journey, how Rainforest acquires and builds brands, and most importantly for the founders listening, what JJ looks for in founders when doing his own angel investing. This is one you won't want to miss.
JJ, welcome to the first podcast series.
Great to be here. Thanks, Alex.
A good starting point for this is maybe give some context for what Rainforest is exactly, the type of company, people, commercial model, etc.
Sure. Rainforest is an e-commerce house of brands. We are normally called an aggregator. We buy and build e-commerce brands, mostly online. We have now about 16 brands that we acquired to date. They are fully owned and operated by Rainforest. They are predominantly in the mother and baby space. We've got a few other brands in other categories, but that's predominantly how we operate. When we take over these brands, we expand them in a few ways, really around product expansion, channel expansion, and geographical expansion.
Got it. And I'm going to start this with a bit of an abstract question, but Rainforest as a name.
Yes.
How did you come up with this name exactly?
Yeah, we were looking for a name that sort of indicates the sum of the whole is more than the sum of the parts, right? And the idea here for Rainforest is that every one of these brands that we acquire and we build is a small sapling, seedling, what have you. So put it together is thriving, lush rainforest, and that's the idea of it. They sort of work with each other and builds a whole ecosystem in there.
Excellent. And I think we'll really go deep on Rainforest, exactly the whole business model and how you've expanded that over the last few years. But you've had quite an exceptional career prior to that as well, super, super interesting. And I think maybe do you want to give for listeners maybe a brief overview of that career prior to Rainforest, and then we can kind of dig a bit deeper in some of those roles.
Yeah, I tell people that while I'm a first-time entrepreneur at Rainforest, I sort of been close enough to the path to sort of got a few sort of battle scars along the way to improve the odds at least for Rainforest, and that's come from my very early career in a tech startup in Singapore. Then moving on post MBA to do consulting with McKinsey across the region in technology and telco. And then about 10 years back, joining Airbnb as a first employee in Southeast Asia to scale Southeast Asia. And back then, Airbnb was the third largest player in this part of the world. Hard to imagine, but they were, it was very much American company back then. Scaled it up. It's now obviously the dominant player for home rental, home sharing in there. Then joining the folks at Carousell after their Series B, pre-revenue, mostly a Singapore-based company. Huge valuations to grow into, and then we sort of expanded across Southeast Asia, across multiple categories in classifieds and peer-to-peer commerce. And then did a year with the Flipkart co-founder Binny at X10X, working with growth scale startups, and then started Rainforest about 4 years back now.
Maybe a good place to start. So formative career in a technology company in Singapore, which at the time would have been not a dominant industry to choose to go into, and then the decision to go get an MBA. Maybe we can start there. What sort of was the decision factor in wanting to go and pursue an MBA? Was it that you wanted to transition into consulting ultimately, or was it that let's go get that experience and I'll sort of figure out what comes next?
Yeah, that's a great question. And actually, it's off. powers a lot of the sort of decisions I make now around and my passion around building a thriving ecosystem. When I graduated, it was sort of the early days of the first .com. It was actually the first .com bust actually in the early 2000s. But back then, companies like Google and all was starting up, and I was like, all right, I'm a software engineer. Let's find one of these cool Google jobs, right? Like search, let's do search. And look around like, oh, great. None of this exists in Singapore, right? Back then, not a single American startup will be set up in Singapore. Definitely not so for any kind of technical roles. And there was you could choose between all these various what we call system integrator jobs, right? Go and implement SAP and Oracle kind of jobs, and
not as sexy,
not quite the consumer kind of stuff that I was looking for. Okay, So I did a sort of a mix of SI plus a product kind of company startup, doing funnily enough software for facilities management, managing software for buildings in there back then, and we were doing. Back then, Pocket PC tablets. Pocket PC, there's no mobile phones, not smartphones yet. Pocket PC apps and so on to manage, facilities, things breaking down, making sure things are operating and so on. But in that experience, I found that a lot of the decisions were made by business folks. Obviously, they determine here's what you need and so on. And you could see, at least I felt that a lot of decisions felt very much just adding features. Back then, the idea of having a PM, a product manager to consolidate all this and do it better didn't exist. It was business AI puts in a whole bunch of requirements. Requirements flows down to engineers. Engineers wrote the code and did it. and I was sitting there really, is changing the colors the most important thing? We were adjusting things like the fonts and colors. Is that really the most important thing that we should be doing as engineers? And I thought there has to be a better way to do it. And that's where I thought I need to go into the business side of things, do a translation between the the technical side and the business side. And that's why I did an MBA to understand more of the business world. I did not know about consulting back then. As again, typical engineers, everything's all in code. But it's I was interested enough to go and explore and understand more about how leaders actually make decisions and what actually drives the company. And that was a natural extension of MBA for a few years before I time to go back into building and tech. And that's where Airbnb was a great jumping off point.
So post business school, you went into McKinsey, if I'm correct.
That's right.
And it's funny, we talk to other founders on this podcast and they generally go into a law firm or they go into consulting. And after 2 years, they're pulling their hair out and they're like, I need to do something else. I need to go build. But I think you spent nearly 6 years there and you'd done quite well. Were you quite comfortable within the consulting setting? And I guess what were some of the things that you were working on there?
Yeah, I think I did a lot of work in telco and tech actually, and a bit of government work that relates in that space. So back then it was two main things were happening in the technology world in this part of the world. One was the transition from fixed line to mobile, and within mobile the transition from SMS to data-based platforms.
Yep.
So there was a big change, a lot of telco, a lot of uncertainty there. I found that super interesting to see what was happening in the rest of the world. What should telco operators do in this part of the world in there? The other piece was the whole fiber broadband piece, which is around how do you actually, all the stuff that we do in the tech world is enabled on this, stuff in the ground. It's not very exciting, but this fiber optic cables in the ground having high latency, low latency and high bandwidths, and how to work with government to build this out, right? Actually, this was super interesting work in this part, really laying the truly foundational work for what was tech right now.
Yeah.
So that kept me really busy and really interested for quite a bit. And then, of course, that the curve slowed down, and it was very clear then the next wave of growth and what happens on the back of this is not going to be a telco operator delivering. It will be all this what we call back then over the top players, or basically all the internet companies today. And that's where I was okay, look, it's going to be more disruptive. The big players have done their job in building all this infrastructure. They are going to struggle to really innovate to deliver all this connectivity, all this internet. Now, how do the consumers actually benefit? And it's going to be disruptors, right? And that's where I okay, let's go back to tech startups where they're building new things, trying new things. A lot of things would die, but that's where it was interesting.
We It sounds like a really interesting experience at McKinsey, but in terms of that toolkit that started to sort of form around being able to be an entrepreneur, would you say that your time at McKinsey was formative in that respect, or was it was a great experience, you learned a lot, but it didn't maybe translate into the founder side?
I think there's a lot of things to take away from it, really around like structuring problems, understanding how large organizations work, and so on. Some core toolkits were sort of useful, particularly to be sort of organized and sort of prioritize things and so on. Like you can't fight all the fires. As a founder, you realize there's a never-ending list of that, right? So which one to triage and which one to work on first. But more than anything, the realization of how large organizations work and how dysfunctional they are, and hence that's where the opportunity is. Like big organizations have this problem around too many VPs. They all fight with each other. There's all like power struggles. There's all this internal dynamics that makes it really hard, and so it's just structurally difficult to disrupt, right? Simply because there's a lot of entrenched interests, right? Like I've got my P&L here. You coming up with a new product will sort of jeopardize mine, and then there's all these things. And it's like, great, this is opportunity, right? Like like if you're a startup, this is where you can change things. Sometimes you can change things from the inside. But sometimes sort of like nothing like a sort of a new player coming in to sort of really push these guys to improve their service levels, like do new things, right? Like I think that's where I found sort of at least the reason for existing for startups, really.
And so at this point, you've done business school, you've done a fair bit of time at McKinsey. Maybe just talk through how it came about that you then entered into Airbnb, which essentially, and correct me if I'm wrong here, was sort of like a scale up at the time within this region itself. And what did that business look like when you were there?
Yeah, so at that point in time, there were two things happening. There was sort of the Rocket Internet guys were actively investing and sort of hiring from consulting companies as founders to set up the Lazadas, Zaloras, and what have you of the world. Copy from X and do it here. Including a clone for Airbnb. Actually, they did it predominantly out of China and sort of entered Southeast Asia as well. And then the German team also did it here as well, Wimdu. And the push for the Airbnb founders was that the Rocket Internet guys had gone to them and said like, hey, we're going to sort of do the rest of the world, right? You can be a nice American company, right? Or you can buy us out, right? Like that was the sort of option. Obviously, they sort of looked at it and said, we'll go to the third option, which is we're going to sort of get some folks that do international expansion and get GMs, general managers across the world to, in particular, focus on getting supply, right? So there were all these travelers around, but actually more than anything else, it was all getting supply.
Yeah.
And, when we benchmarked it back then, we sort of had this, how many homes in Bali you could book, how many homes in Phuket you could book, KL, etc. And Airbnb was, there was sort of some organic growth here and there, but very, very tiny. And that was really the focus, really to launch, get good quality supply on board, homes and hosts on board back then.
I was going to say, if you think about it back then, that market was totally opaque, right? Like it was hyper fragmented. You really had no idea on how you would price it. So I can only imagine going through that journey that's not an easy place to start, right? Even getting supply onto the platform where you've really got to disintermediate all of these operators that might have 30 to 50 homes in any one jurisdiction.
Yeah, and there was sort of so many different ways, right? There was sort of like some local Bali sites, for example, where you could sort of, chat with them, send an email, and then they'll say like, here's my bank account, transfer your money in, and you got your booking. Good luck. So there are a lot of all these things, and what was interesting also was that like the so-called playbook for acquisition wasn't so clear. We had a team in Europe, we had a team in US, team in Brazil. We will sort of share notes around like, okay, how do you do it, right? So all those were sort of innovating in different ways. Okay, let's send a guy on the ground. We've got some guy calling them up. We've got back then I think Google Maps was just Google Street View was just on, and the people would sort of go on Google Street View and look for homes with rental signs and call them. It's all sorts of interesting sort of playbooks. But eventually, what was most important was actually getting on the ground, and for any one location, just getting. There was some threshold number around 30 to 40 really good homes, right? Which is you send a photographer, you get it well listed, it's a high quality host, and you get your first few bookings. And once you hit the threshold number, we found just organic growth just took off, right? Like there were travelers, you get a booking, they'll tell each other, and more and more homes will sort of multiply, and then at some point they will become travelers as well. And so the focus was really kicking off cities, right? Like all sorts of different locations, and that was the focus of the work back then.
I think you touched on it there, right? But I think one of the age-old questions in this region, especially when it comes to big tech, is, especially for the Western big tech companies, is how much direction is taken from, I guess, the parent operations versus how much localization is actually deployed within the region. And I know some people and some companies have sort of gone back and forth on this over time. And some people genuinely struggle with it, because some companies out here take a lot of direction from the West, and some companies really lean into localization. How did you kind of manage that within Airbnb itself?
Yeah, I think Airbnb did the right decision at the right point in life, right? Like the life cycle of the company. In the early days, the flag planting side of things, which is go fast, the objective was speed, and it's less about overall coordination and efficiency kind of thing, which is, okay, local GMs, you have your own playbook, we don't determine anything. You will have some amount of product support, right? Not a huge amount. That's where, for most tech companies, global tech companies, the biggest challenge is really around like how much support they can give to sort of Indonesian local payment gateways, for example. Like that back then, it wasn't so, there wasn't a Stripe layer back then and so on. I think that those were always the bottleneck. But the speed at which you sort of go out and acquire all these things was critical. And once there was sort of the local battle of supply was won, it started becoming much more global in nature, which is like, annual planning was about, here are the corridors that matter. China to Japan. Super important. This is how it works and so on. So there was no Southeast Asia strategy or India strategy per se. It was a global, and naturally travel is global. So it's corridors, your priority, budgets are assigned, everything's done a lot more centrally, right? The local stuff was really around, regulatory work, some amount of supply work here and there, but there was no such thing as regional strategy once the sort of supply side was set up.
Got it. And then, you mentioned before that you made this move to Carousell. I didn't realize it was actually pre-revenue, which is quite surprising. How did this transition come about, and maybe just a bit more detail around what that Carousell business looked like when you joined?
Yeah, so I had got to know Suri and the co-founders of Carousell while I was at Airbnb. They were both were Sequoia investments. One was Sequoia India, one was Sequoia US. But the connection was made. I would speak to them from time to time. And on the back of their Series B round, they reached out and said, like, look, we're looking for someone to help with international expansion and just generally sort of scaling up the company from where we are. There were about 30 to 40 people back then, mostly interns. I was the, hard to imagine, but I was the oldest guy on the team, like the old guy, as Suri will call me back then, to sort of like professionalize everything and get it to the next level. Predominantly a Singapore-based company back then. They had initial traction in Taiwan, and then they were sort of figuring out, okay, what next, right? Do we do Indonesia? Do we do more developed markets and so on? And that's where I came on board to help them with those areas. And one of the biggest impetus for me was really the story around these guys actually getting scolded by their parents for being entrepreneur, right? It was like, oh yeah, parents really disappointed in me that I don't get a typical job like all my other peers. I was like, oh, that can't be right. Like now we really have to come and make this a success, right? Like let's go do this properly and make sure the next generation doesn't have these issues anymore, right? Like you can be entrepreneur. Obviously, things have changed over the last 10, 12 years, right? Like, now, hopefully less parents, Singaporeans parents are sort of cribbing about the kids being an entrepreneur. But that definitely had to change. And that was one of the things for me, like, okay, like, let's go make this work. Turns out a lot of work, but good fun.
It seems as if, like, the way you talk through Airbnb and Carousell, these are like pivotal moments in those companies. Like I'm not sure if it's 0 to 1 or if it's like a scale up. But, Airbnb, you're identifying the supply side and basically scaling that up. Carousell, identifying international growth opportunities. Like, do you think that's your sweet spot, like as an operator, as in the 0 to 1 or scale up mode?
I think it's this sort of like, you can look at 0 to 1, 1 to 10.
Yeah.
I look at it as a bit more the inflection point of 1 to 10 kind of thing. And for me, the biggest idea is really around like, is it at the inflection point, right? Like, can I, sort of like, the angle of change of a few degrees multiplied by a number of years really ends up in a big difference?
Yeah.
Or is it at sort of at a point where, the few degrees difference doesn't quite move the needle anymore? And that was what I felt in the consulting days. So I sort of like sometimes, doing some work where you're sort of needling, not really quite moving the needle in some of these areas. It's like, okay, this adds a little bit of 2 percentage points to the top line, right? Whereas at the early stages for these companies, this makes a big difference, right?
Yeah.
Do you, is Southeast Asia part of the Airbnb network or not, right? Like, and for Carousell, it was more, is this a Singapore-based company or is this going to be a Southeast Asia-based player, right? Like, so it was that kind of step change challenge, and that was what made it so exciting for me.
Do you think it's something, we invest in the very early stage, pre-seed, seed, and one of the things we're constantly debating is for someone who's had a really storied career inside of bigger tech, at a point where they've joined, it's not 0 to 1, it's now the 1 to 10 type journey. Do you think that still gives you the right level of experience to go be a founder? Or with retrospect being a beautiful thing, do you feel like there's actually a whole nother set of experiences as you go 0 to 1 where you're like, even if I've been in big tech, it's still a lot to translate it into the actual 0 to 1 journey as a founder?
Yeah, I think there's a part of 1 to 10 where the playbook is already fully established and you're sort of just, setting up the sales team and sort of grinding through the sales motions.
A lot of execution.
And, a lot of execution on the same foundations. I think there's a part just at the sort of transition of 0 to 1 to 1 to 10 where you're still building the playbook, which is like, how do you launch? How do you actually get the first thing? What is the sales motions?
Interesting.
That's actually where you will see that you're much more prepared for founder life. You sort of come after something has been set up. You sort of go through the same things. The playbook is already established, and you're about executing well and getting the right people to do it, right? So there's a bit of that sort of building the playbook area where it serves really well for being a founder, because that's where you're sort of experimenting. You don't really know the right answers.
Yeah.
But you sort of see some patterns around like, okay, this could work, and you're comfortable with that amount of uncertainty around like this may be the worst way to do this, but let's go with it, and then we can figure out along the way, right? Versus being coming in and say like, hey, tell me what's the SOPs and execute it.
So you're getting to the end of your operator career at this point before jumping into the founder sort of cauldron. What did you realize were the domain expertise that you had? Like, what were you doing in those pretty cross-functional roles that you were like, I'm awesome at product, or I'm great at setting up sales or go-to-market playbooks? Like, what was the things that you saw as a superpower, and what were the elements that you were like, hey, if I ever take the leap into being a founder, I'm going to need to build around me to make sure that I've absolutely got the best chance of success?
Yeah. I think the key things for me was really around the understanding of what tech can and cannot do, right?
Yeah.
Sort of like, if you don't have enough understanding in that domain, you're sort of like, tech can do everything, and then like you realize like actually no,
really
you can't. They can't just solve everything, right? And understanding where it can be sort of deliver the most value for the consumer, right? Like in sort of e-commerce world, it's really about search, discovery. It's about online shelf space and stuff like that. Like what is it about the business that's sort of unique, that's different from traditional retail, right? And understanding that what technology enables. I think that's one big area. The other big area of having spent so much time in the ecosystem is really around identifying and understanding great people, like who are good people in the domains, and what's a sign of a good startup employee, right? Like someone who can work well in a startup model. I still haven't got it perfectly right, but I think I've got a better fighting chance than the average sort of interviewer. I think that's really the other piece of it. The third part of it is obviously building up the credibility to both with investors as well as sort of like attracting talent to come on board, right? So those combination of those three things gave me a different foundation versus the Carousell founders who were fresh graduates, and then they'll pitch a seed funding and so on. I think that's really the difference.
Let's maybe gear shift now to Rainforest itself. And What was the aha moment? Because I guess there was a bit of e-commerce experience, obviously there with Carousell, right? And you'd kind of built this domain knowledge across your time with Airbnb as well. But what was the reasoning for kind of leaning into the Rainforest business model?
There were two guiding principles for me back then, right? The first one was really around seeing that, like, in the marketplace model, there were always participants that were underperforming. Whether it's of an Airbnb host who's like, wow, this guy has an awesome villa, but he just doesn't get his calendar right. He somehow doesn't get the bed sheets right. 10,000 reviews of saying hey, just sort of cleaning fees
Fix
don't make
this.
sense.
Yeah.
And so you could do so much more, right? And we were investing lots of time, money, doing hosting events and sort of education, incentivizing them to. We always look at this sort of bottom quartile. The next quarter and stuff. If you move these guys over here, they will make money, the platform will make money, and it'll be great. Same at Carousell, right? There'll be all these sellers, some of them professional. If they got their photos right, descriptions right, pricing right, and then we'll invent tools, right? Okay, let's do some automatic pricing and so on. So it was always this idea that in a sort of in a marketplace environment, there were opportunities where you could professionalize some of these participants, and no bigger environment than sort of e-commerce, right? There's all this. Especially on Amazon where we operate, a long tail of players who were reasonably okay and they could take them to the next level. So that's one guiding thought, and say this could work. I've seen it before. The second part of it was actually driven a lot by particularly my Carousell experience, where we were sort of pre-revenue and we had to do round after round of funding, and I was really trying to find looking for a model where the idea of sort of runway and fundraising, you didn't have to spend your whole life fundraising, and how do you sort of quickly get to, in my mind, what I call unlimited shots at taking a shot, right? So every time you get a fundraise, you sort of have 15 months to sort of break out and do it right, and then you maybe get another round and do it. But if you're profitable and cash flow generating, you have unlimited. You self-fund 2 or 3 million a year, and you sort of have multiple shots at doing an outsized breakthrough, right? And that's the sort of a model that I wanted. I didn't want this overhang of runway over my head all the time. It helps me sleep better. And again, coming from the sort of Carousell experience where the fundraising stakes kept getting higher and higher. So the combination of those two things, so this model could work. Turns out still a bit harder than what I expected in some of these areas, but that was the guiding principles. Yeah.
Maybe going back to day one, how did you make that decision to actually go all in on Rainforest? I mean, talk to us about what was the need to validate, how much work did you do to kind of go, this is going to be the full-time gig that I go forward with, versus was it a process of iteration? You went through a bunch of different models that sort of had those guiding principles. Maybe, it'd be awesome to sort of understand that first day, I guess, equivalent, and the lead up into that, going, hey, we're going to do this full-time.
Yeah. I think there's a bit of a background around the sort of life stage side of things, right? One of the things that happened through COVID was, Airbnb went IPO, and that was give me some amount of the amount of risk I could take could change on the back of some liquidity from Airbnb. I think that's one of the big things. And then the idea was in my mind was, okay, what's the highest risk thing I could do? Be a founder and take the highest risk, right? Obviously, that's a starting point. And then the sort of what businesses could come into play. Obviously, I was looking into marketplace models where, there's a lot of this, looking at different models. But at that point, it just happened that this sort of trust show was happening in the US, a few players happening there. And quite simply, one of our investors, Insignia, and actually came and said, look, this model is taking off. Will you be interested in take a look at this? We've got some white paper ready. Take a look at the model. And I looked at it, I was like, this clicks. Compared to all the other stuff that I've seen and thought about, this clicks. Let's take the dive and do our first. Look. Actually, the first work was, are there targets to acquire, and also deciding actually which markets should it be. Right, we were deciding initially to acquire brands in Southeast Asia, and then quickly realized that after speaking to many founders in this part of the world, it's not that many brands. And not many of them were sort of willing to exit that so soon, right? And quickly realized there was this Amazon ecosystem, sellers in this part of the world, found my co-founder, and that's why we went ahead with it.
let's maybe touch on co-founders, because I've heard you speak before on having a fairly calculated process of identifying those people and I guess covering your blind spots. Do you want to maybe talk through that for early founders listening?
Yeah, so I don't think there's any fixed template to this, but like I definitely didn't. I didn't magically grow up with three buddies who are all entrepreneur minded with different skill sets. So when this idea came about, I said like, okay, this is the business model. What do we need in there? Which is like we need to be great at M&A. We need to figure out the deals. I haven't done a lot of deals before. We've done some of it in Carousell, but like really structuring and negotiating and so on. We need to be great at operating these online brands, which is like I have not. I've seen the marketplace, but I have not actually run a brand myself, right? So, and then the third part of it really rounds off bidding, getting capital, forming capital, building up the rest of the team and operations. Fine, that I could play a role in. So, my co-founder, my CFO, was just focused on M&A, and in there, Jason was exiting after Faith was bought over back then. Again, through one of our investors connected and said like, hey, this guy is looking for opportunities. Has been in multiple startups in Ovo and Faith. So it was COVID back then. We couldn't meet. He was based in Jakarta, so we had tons of calls and to sort of assess each other. Right? He was thinking like, okay, is this guy legit? And I was thinking like, does this guy have the is he up for really being a founder, right? Or in there. And but eventually that turned out well. He too was really attracted to the idea of getting to sort of cash flow positive businesses, not worrying about sort of fundraising after fundraising rounds. And then Ola, my third co-founder, who's turns out in my work in looking at different brands and talking to different founders, I came across him because he had been running a 7-figure brand on Amazon out of Singapore for the last 5 years. And also had an Amazon SaaS company back then, right, a small one. Initially, he was, like, good luck with you. This doesn't work. The Trusher guys have spoken to me, but eventually he sort of said like, actually, you know what, this could be interesting. Like, is there a way I could be part of it? And then also got him on board, in particular for his expertise in both the tech side of things as well as the Amazon e-commerce side of things.
What you've alluded to there as well is that you have all kind of worked remotely in some sense from day one, nearly. I remember I've caught up with Jason in KL before, and obviously you met when he was, in Jakarta. But, you're managing quite a distributed workforce. Like, how does that gel from, like, I guess a founding team, right? How do you make that work if you're distributed? And maybe a second point to that is around, like, everyone else as well. Like, how do you ensure that you're, establishing a vision that everyone's following? How do you create structure and strategy around a company where the team is distributed?
Yeah. I think for founders, I think the first time where we all met together in person was almost 1 year after founding, right? Where sort of, borders were opened up, we could actually meet and so on. But before then, it was just a lot of calls. We had like weekly, almost daily calls in there, spending time. I think the big piece was really around. Big piece was also, there's this part that's really hard to do online, which is like knowing the person. Like you can't sit on a meal like, oh yeah, that's what you like to drink, and like your family and so on. It's just very hard to do online. I think that's the part where we struggle. But once borders open, we spend a lot more time as founders together, deliberately, right? Like, even getting to locations together to do work together and so on. I think that's one big part of it, particularly to build the trust element of things, right? Like, and this is, if things go well, it's perfectly fine. You can work in a semi-professional, low trust people on the internet kind of thing. Everything's going from wine, and there's nothing to worry about. I think when things come to a crunch, is when it becomes really tough, right? Like, do my co-founders have my back? Do we have each other's back in these discussions? I think that's where it becomes tough. We fortunately didn't, particularly in the first year, didn't have any sort of really tough times. But over the last, especially when the aggregator sort of space become much tougher, I think the fact that we have spent time to get to know each other and understand and build that trust was really critical for us. I think otherwise, basically co-founder teams could have broken up at that point in time if there wasn't enough trust around working through tough times. And then for the broader team, the remote setup has been more practical and more easily accomplished on the fact that we are mostly on the same time zones, right? So there's remote, but mostly in the same time zones. And we've been quite a stickler around like getting the OKR set up, which is like, look, you can do your work whenever, however you want, right? But when there's a call, you show up, you get on the call on time, etc. And we are clear around the outcomes that we want from this quarter from you, right? Which is like we write down exactly what's success, and then say like you deliver. Again, as the team expands, the quality of these OKRs dilute a bit, but so far we are a sub 100% team that still works quite well. Write good OKRs, be very clear around the outcomes that they're supposed to do, and to some extent we actually find some of our employees finding it more stressful in the sense that like it's not about you can't show up and just sort of look busy anymore. You just need to deliver the work, or it's just a 60% completion, and you're assessed against that, right? It's very transparent, and sometimes quite tough on folks as well.
It's an interesting business model in the sense that you're scaling a team and you're scaling this centralized platform, but at the same time you're acquiring brands that have been built by their own entrepreneurs and have developed their own culture and teams and ways of doing things, I'm sure. And there's clearly a red thread as you're looking through those targets, but I can only imagine that 16 brands in, you've learned an awful lot about how to implement and ingest those brands in a way that's going to deliver success, right? So it'd be great to understand how do you manage that? Like what's been not just the playbook of how do we optimize the operations to be successful from a revenue and profit, but how do we take a business that's in existence and make it our own?
Yeah, I think that's I think one. This is where again the sort of never underestimate the sort of like founder hustle and like motivation when you're put on the spot as a founder, right? Like and you sort of look at them. Sometimes you sort of a husband-wife team, not very professional, almost like running a sort of like cafe kind of thing. We can do better than that. But you'll be surprised how good they are, particularly around certain areas of, particularly around inventiveness and sort of product thinking. Right, a lot of them built their initial business on the back of some lightning in the bottle idea where they're solving their own problems, and suddenly that product hits off and becomes the top seller on Amazon. Right, like I think that's the part where it's very hard to replicate that and sort of take it over and say, okay, we've got one hero product, now let's develop the next two. I think that's much harder to do. I think operations like working with the suppliers in China, negotiating, packaging the products differently, etc. We can do this. Optimizations is easy. Step change of product innovation, I think this is where it's harder to sort of like replicate and do OKRs on like, it's very hard to set OKRs, say like, you need to create one more hit product next quarter. There's a bit of timing, there's a bit of intuition and so on. I think this is where we are spending a lot of time now to sort of like, okay, how do we create a bit of the engine where we take more risk and take more shots at goal and be willing to fail. And this is, again, as a solo founder, you fail, you take the responsibility yourself. No one's there to sort of, evaluate against OKRs and do that. In an organization, it's actually hard to set that up such that there's enough of that risk appetite for us brand managers run this. And that's where we do a lot of work to sort of like, hey, look, it's okay to fail. Like, we need to sort of like take more risks, and that's how we take the breakthrough areas. I think that's where it's a bit harder to replicate that sort of like secret sauce in there. And a lot of it now comes to sort of incentivizing smart failures with our brand managers.
How do you define, I guess, success for a brand that you've acquired? Because I guess my thought process on the brand aggregator business model is that when it started, it was very much revolved around successful acquisition targets. But I feel now, and I think we've spoken about this a bit as well, is, okay, now that we have this suite of brands, how do we actually strengthen that brand itself? How do we strengthen the product line? It's not about optimizing for costs, etc. How do you define what success looks like for one of your brands at Rainforest?
Yeah, I think when the industry started, there was it was started during the zero interest rate days. Back then, the incentives were perverse, right? Like so acquire some EBITDA, you get more EBITDA, you raise more capital, and so and basically it sort of became a game where everyone just sort of build capital. There's no sense around like quality of assets, right? Like very little, right? Like it's also like, oh, there's this trailing 12 months EBITDA. We assume it's going to be at worst stay sort of consistent. In reality, no, it can go down to zero very quickly. Actually, it's all, especially small brands, right? It changes quickly. And our learning is that like, yes, there's a big part around picking, right? Selection. There's a big part around selecting brands that are a bit more have a bit more potential, have a bit more sort of steadiness to sort of the hero products, and can build on it. I think that's one area. And also nowadays we also look around like, you know, do the levers work, right? Like, does this product actually sell in Europe? For example, there's some products where great in US does not sell in Europe, etc. Right? Like so, there is still the element, but much more than anything else, I think the outsized gains is really comes back to very old-fashioned, very boring stuff around, can you build a good brand? And what we have learned is that like it's hard enough to do it one time. Doing it across 16 is extremely difficult, right? Like, you know, it's very hard to have that much depth of talent, that much founder attention to do this across 16. And right now the focus for us is really around taking a few brands and really investing our time in it to really build out the product, the brand, the story, and being consistent about it, such that we are actually sort of not just about being good in a channel on Amazon, but actually being recognized as a brand for moms out there.
I think, you know, just on the Amazon point, right? Like, I think some of the other levers that aren't so simple. I think like creating and amplifying a brand is quite difficult, and it's sort of like a long-term process.
We're doing so without burning a ton of cash and paying into Facebook and Google, right? Like that's the
exactly. And I think the other areas that people think about in terms of, you know, expansion is geographical expansion, right? Like, can I take this brand from the US to Europe? Or channel expansion. Can I take this brand from Amazon to Walmart or Amazon to TikTok Shop, for example? Or assortment expansion, right? Like, how do you kind of think through those layers when you're trying to build the brand?
Yeah, I think from sort of like getting financial outcomes or performance outcomes, because we acquire Amazon brands and products that have good reviews and ratings, one of the natural expansion that, again, when you're sort of smaller SME, you can't do, is to expand into other markets that Amazon's already in. Actually, Amazon's US is about, call it 60% of their total global GMV. So Canada is quite sizable, UK is quite sizable. When we move our products into these markets, we carry the reviews and rankings, and that actually makes it a quite easy, relatively easy entry on the back of Amazon. So that's one of the things that we do as the lower hanging fruit in there. Takes a bit of work around, you know, VAT, etc., like, you know, all sorts of regulatory stuff, but that's the first piece. I think channel expansion actually has been limited in some of these cases. So in the US, Amazon is so big now that like even though Walmart is growing faster, we're in Walmart.com. It's just a small fraction of Amazon. And then D2C has this big challenge around buying affordable traffic, right? I think it sort of takes a lot of time for you to sort of build enough traffic and making CAC work on these platforms like with Facebook and Google.
So, I mean, maybe we can zoom out for a little bit to macro, right? So when you incepted Rainforest, you know, I think it's fair to say that the aggregator model generally and globally was probably one of the hottest business models that had existed, right? I mean, it was just incredible the amount of capital that flowed into the space, right? And, you know, fast forward to today, we've seen that change pretty substantively. You know, we're fortunate to be investors on the journey with yourself. And, you know, our observation is that you guys have done a remarkable job of reacting to those market changes. And I'd say done a very good job of being able to continue to raise the capital you need, spend it in an efficient manner, and navigate what's a pretty difficult environment. I mean, you talked about founder trust and the fact that you've got this team kind of bought into a mission and a vision. But how have you managed to do that in a way where, you know, the largest and probably the best comparables that you were raising against early on have, you know, are finding it very difficult to exist in today's environment?
Yeah, I think that still plays a challenging role right now, right? Like when the sort of the largest, and these are run by extremely experienced teams, right? Like, you know, if you think about like, you know, Trusher has gone bankrupt. This is run by, you know, the former CEO equivalent of at Airbnb and was a senior exec at Amazon. Like these are run by really talented folks, right, in there. But on our end, what's gone well on our side is we have been very much risk averse in some of this like acquisition, particularly in acquisitions. So we've been back then we thought we were the slowest acquirers back then. I know we would read news of people acquiring brands after brands, like what are we doing wrong? Because we will look at one, we'll pull out, we do DD, and it's all like no, that's not good enough, and we pass, right? Even though there's immense pressure to solve this. Why don't you just buy it as EBITDA, and then we can, whatever sort of like red flags we can sort it out later, right? But we were fortunate to be quite stickler on those areas. We still made a few mistakes, I would say, in there, but generally come out well in there. We're also very conservative around like our use of debt in there, right? Like I think partly because first of all the debt situation in Asia is not great, right? Like so we had to source from US, which was super expensive. So again, that dampened our appetite to use debt as a big growth lever in there, right? So again, that played in our favor because rates kept going up after that and so on. And the last one was we were extremely sensitive about this COVID bump, right? Which is like, okay, is this real, or is this a COVID only one off 12 months, and the owner has a lot more information than we do around selling it as its peak, right? And I think generally, particularly when we pivoted into mother and baby, avoided anything that was sort of like, I think there was I still recall like a brand that came to us in board games, COVID board games, like,
Perfect.
4x growth, like amazing, right? Like this is money printing business. But we're like, okay, this looks really, really great, but there's got to be COVID in there. And turns out like next year, it's like almost tanked to zero, right? That was how crazy it was back then.
Interesting. Maybe coming back to culture and team, one of the things that we've heard you speak about before and we know is how important you see incentivizing the team to feel like owners is, and leveraging share options and equity incentive schemes to make sure that people feel like they're contributing to the overall success and are a beneficiary of that. I mean, it'd be great to understand, as a founding team, what's been that philosophy, how useful has that been, and being able to build a team that's all pulling in the same direction as you guys have scaled.
Yeah. Again, I already sort of alluded to how challenging it is to get people to, getting employees to think with a founder mindset. It's what we stay in the sort of core values, right? Think like an owner, think like a founder, make decisions like one. And we incentivize we sort of put dollars against it, which is like we evaluate performance on the back of not just your OKRs and so on, but also core values. And a big part of core value in there is ownership mindset that determines bonuses, etc. The other part of it is every employee that joins Rainforest has ESOP, right? And we sort of give monthly updates to our employees. We have full transparency in our P&L, all our brand's performance, our fundraisers and so on, and the price per share, etc. Right? So we give them full understanding around like what that ESOP is worth now, and what how much they're vesting and how much they'll get in the future. And there's great platforms like Kata Capital out there to sort of like facilitate all these things. But fundamentally, I think the most challenging part is actually getting them to sort of really make the decisions versus saying that like, here's an idea I have, like could you sort of rubber stamp it for me and then like go ahead, right? And that's the part where building the culture of sort of asking forgiveness rather than permission is takes a bit of work, right? Like it's about really getting the right kind of profile, and it doesn't have to be the full organization. In our case, specifically, actually, brand managers are the most critical part of it. Like getting some people who have been through more entrepreneurial kind of journeys, been a founder themselves, finding the right kind of profile is a critical part of making that work for us.
And so, I just want to go a bit deeper on that, because one of the questions that we always ask founders is, well, how do you approach hiring, and what are the traits that you look for at early stage versus, say, later stage, right? And I think Rainforest has around 100 employees now. How has that changed over time in terms of the ideal profile that will work for Rainforest?
Yeah, I think this is where I take some of the experiences from particularly my Carousell days into sort of hiring, which is, I used to think, especially when you come from consulting and or you're sort of coming from a larger like organization like Airbnb, where get the best talent out there. Like that's the simple answer. Like just find the best talent, pay for it and that's it. But actually at the scale up stage, you got to be careful around, like, first of all, you can't afford all of them, right? Like you can do a big song and dance about ESOP and so on, but even your ESOP has limited, you don't have infinite ESOP in there, and it's hard to sell sort of senior execs on that all the time, right? So now it's been more nuanced around sort of figure out like which are the critical areas they need to fill with like top talent, and then sort of like figure out who are the sort of the right sort of rank and file people who get the job done and are good in the area they're supposed to be good at. I think that's really the sort of focus for me, and therefore some areas we sort of evaluate a lot more around core values, the entrepreneurial mindset. Have you been in a startup before? Have you been in situations where there's this concept called runway, and there's sort of like investors and performance and so on, and then there's more functional roles where a lot of focus is really around like, have you done this job before? Have you actually have a number of years? Have you managed this number of skills before? Really about functional skill sets in there, and separating the two, right? In the past, it used to be you need to check all the boxes. Now we have a lot more focus. You need to check a lot more boxes as a senior leader. But as a functional sort of contributor, we sort of focus a lot more on the functional side of things. And then we've got 2 or 3 sort of like areas where we found to be issues in the past, which is remote work, right? Remote work, everyone thinks it's a great idea until it's sort of like, oh, actually, this doesn't work for me. So sort of now we sort of do a bit more probing into the area. Like, are you really comfortable with remote work? And, are you sort of comfortable with sort of outcome-based approach to things? And the other one is really around like being able to communicate in a sort of remote work setting, which is writing down a lot more things, like rather than sort of like relying on verbal communication. A lot more things are documented, written down, a lot more Slack and emails and documents.
You've referenced investors a few times in the podcast, and I think that you're one of the rare people in the ecosystem that has bridged the gap between operator, founder, angel investor, and has fairly substantial experience at fundraising themselves for their own company, right? For early stage founders listening, how do you approach raising that first round? Like, was there a process that you deployed at Rainforest? Any learnings or things that you would have changed if you could go back in time?
I think Rainforest one was a particularly sort of unique case. It was sort of, I could pull it off back then on the back of sort of the experience I had, the network I had, and the credibility I had from my previous experiences to raise a round on the back of practically PowerPoint, right? Like, I think, it was a 1.5 million round or something to do the first acquisition. And obviously we had to do work around, hey, we have some targets and so on, and get it going and prove on the first acquisition that like, okay, the acquisition works, we can run it and then raise the next round from there. But for most founders, I think the sort of the bar is actually, harder now, which is like you almost need to come very close to product market fit, and then raise a round these days. And my biggest advice these days for founders in today's environment is to operate as lean as possible, to give yourself enough time to get to that space, right? Like, you raise your angel round or what have you, and to operate really lean. I mean, I always give the story around the Airbnb founders, right? They sold cereal to get enough capital to run the business. Like, it's that lean, right? Like, and it's very hard to imagine these days because, startups now, we've raised a round, let's, get a nice WeWork office and so on. Like, I think the emphasis on giving yourself time, as much time as possible to crack the next stage is the mindset that they need to have. And that's really one of the things as a, from a sort of angel investor point of view, I look at like, do these guys have the sort of like hustle to stay lean and, go the next phase, right? And even extreme to, I don't advise anyone to sell cereal. We actually have a cereal brand, by the way, but like, I don't advise anyone to sell cereal to fund their startup. But like, if it comes to push come to shove, these, the real entrepreneurs will find some way to get cash to run the business, right? Like, I think that's really one of the things I start looking for a lot more than before, which is like, do these guys have runway, right? Like, versus of, what, I'm done, like, go back to my nice Google tech job, like.
Maybe dig in a little bit deeper into that with the benefit of having worked at Carousell, Airbnb, being a founder yourself, the angel investments you've made, what has been that number one trait? You mentioned that hustle, but day one of a pre-product, pre-revenue, you've just got a PowerPoint. What would you put money into versus not? Like, what would be the trait that you look for that you're really diligencing at that very, very early stage, and how do you diligence that?
Yeah, no, this is a really tough one. I clearly don't have all the answers here. One of the things one thing from the soft like the ones that fails, right? Like it's the most disappointing angel investments for me are the ones where the founders just throw in the towel quickly, which is look, I said I'm going to raise, it's going to give us 12 months is going to give us X. It's now month 11, we're nowhere close, right? Thanks, guys. And I'm in fact, they're already doing a side job somewhere. I'm doing part-time. It's for me, that's so for me now I look for that signs where these guys are ready for it, which is they understand what entrepreneurship is about. They understand how tough it is to make their next milestones, and they are less about making a 12-month check, 12-month kind of thing, but thinking a bit longer term in there. One of the greatest signs for me is really around their life stories, really around how they were brought up, or any signs they were hustling on the side before, right? Have you between college, did something, sold pizza, that kind of more entrepreneurship signs. For me, that's one of the areas that is a good indicator that okay, this is not a person that grew up in a, I studied, got my grades, get a job, meet my job requirements, get promoted, kind of standard career path. Someone's willing to look outside for side hustles, things. Those for me always stand out as a big signal. The other big signal is actually if you actually say no to them or give them any kind of feedback and they come back with reactions to that feedback.
Yep.
Right, which is, hey, no, but this is, you ask them some tough questions and they take it back and they bother to come back and look to you and say, yeah, actually, you know what? This is what we have done now on the back of that. We've now done some user validation. You said that there's no real user validation. We've done some user validation. We've tested some users. Here's some feedback from them. That for me is signs of a growth mindset. They're not coming to you with a sole purpose of raising capital. They're actually listening and then taking that feedback and doing something about it. That's another great sign for me.
That makes sense. One of the things that we talk a lot about is this concept of the mad scientist, right? In the sense that you can put someone in front of a whiteboard and you can, in the next 2 hours, watch them entirely break down the problem statement and how they want to fix it, right?
Great.
And this idea where it's there's no need for a deck, there's no need for all this polished material, but you clearly understand the problem statement so well and you're all in. You're clearly thinking about this 24/7. And those instances where we've seen that happen, they're the companies that have gone on to do really well, because it's I'm not going to give up at month 11 because I have this itch that I just need to scratch. Right?
Exactly.
I mean, no one ever gets it right 100% of the time,
obviously,
but there's just that element of someone is got that look in their eye, which is
and they have it in their head. It's they're working, there's cranking in their brain.
Look, I think as we look to wrap up here, I'm keen to get your view on what the future of Rainforest looks like, but also, I guess, coupled with that is specifically this business model as well. Like we've referenced in this podcast around Thrashio and the challenges that this business model has had in the last couple of years. I'm just keen to get your take both on that and then also from the Rainforest perspective.
Yeah. So I think the era of just raising capital and just acquiring EBITDA and nominally you call them brands, but there's pools of EBITDA out there is gone, right? That's not going to work in this kind of environment. And quite simply, you can't. No organization can run that many brands. I think Thrashio had a few hundreds of them, right? That well. You got to be extremely good at pulling enough talent to run that many brands well. My sense is that there will be success cases in this industry, but it will be on the back of aggregators with fewer brands that make it work, and with enough talent to run a few call it a dozen or so great brands that go out there, maybe fewer, and they're established models of this, right? Which is the established companies out there with good brands, house of brands concept, and they all operate well on the back of shared services that operate well across all their brands. For Rainforest, we are focus on a specific category. So mother and baby is a huge category, and you sort of double click in there. There's a lot of different subcategories and products in there. It is fortunately also a relatively sleepy category. Like, the big players in there have been around for many years. They just keep churning out the same strollers, what have you. I think there's a lot of room to innovate, both on sort of distribution, just being online, and also in other areas to sort of get to them. And also just the product itself. Like, there's a lot of work we can do. And for us, it has to do with sort of product innovation on the back of us being closer to the consumers. And here we are doing a lot more work in sort of building a mom community and so on to get closer, getting their view of what is great for them and their problems to solve. And the other half of it, and being part of this part of the world, is actually working with suppliers and say, like, is this actually practical to build, and what can we do in a way, right? I think sort of marrying those two is where we are trying to sort of get the breakthroughs in product innovation.
And final question, for early stage founders listening, what would be some kind of final words of advice or key learnings that you've had from this journey thus far?
Wow, so many. I guess I will go with sort of like the duality of sort of like, finding something where you think it's a great idea, and then testing with enough honest people, right? Not the guys who are polite to you, right? Like, don't ask your mom and so on. Like, people, and this is where you ask the right kind of like investors, or like, they'll be who can be nice about it, but give you the 10 reasons why it won't fail, it would fail, or where the problems are with it, right? Like, and then being able to sort of like bridge and say, like, yeah, this is still a great idea. I think that's where you sort of elevate to the next stage, right? Like, I see too many founders around too much in their own bubble around, like, I think this is a good idea, right? But I don't validate outside with not just investors but also the users. And then the other way around, which is like, they don't think it's such a great idea, but they're sort of following, what's the flavor of the AI month out there, whatever, what have you, right? Like, I think that's also another great way not for it not to work.
JJ, always super insightful. Thank you so much for joining us on The First.
Great. Thanks so much, guys.